Hello everyone, welcome back to Crack Grade B. So today we are discussing few numericals, few questions which are relevant from the perspective of your coming PFRDA exam, right? So if you want to see other kind of costing questions and other questions which you want to practice on questions on costing, then you can see our playlist, right? We have done quite a few MCQs on the subject of costing, like marginal costing and all those things. We have already done that. Now today I have brought some conceptual questions, not so practical, but some conceptual questions on costing that would help you in some way or the other in your examination. And one more thing, like, I would not limit my discussion to these question and answer itself. I would little bit expand the horizon so that we can discuss other topics as well, like whatsoever is coming in the radar of our discussion topic. I will try to cover that as well while I discuss the questions. What the question is? For which class you're talking about? Please tell me, please clarify which subject you are talking about, commerce and accountancy. And I have told this to you guys again and again that whatever problem you might have in the question and answer and all that thing, please try to write in the comment section on that particular video itself. Yeah, so that's fine. If you have the problem, then please write question number in the comment section of that video. I'll reply to that, right? We cannot discuss it in the current class. Please understand that. Is that okay? So will you comment down below on that video? We'll discuss over there. Okay, fine. So costing questions, number one question is your prime cost plus factory overhead cost is. So I am pre-assuming that you must have seen my costing videos. Even if you have not, let's just discuss that in brief, that how your cost sheet flows so that you can have a good idea of what type of costs are there, right? So we start with direct material. Then you guys have direct labor, followed by direct expenses, correct? All these three form part of your prime cost. These three are your prime cost. Now, after this, you add your factory overheads, right? All those expenses which are not direct in the nature related to the production of your goods or services, and these are incurred in your factory premises, are into your factory overheads. Now, once you add this, you will get your works cost, correct? Then I add in it my administrative overheads, followed by my selling and distribution overhead. This will give me my total cost of goods sold. So this is how your cost sheet flows, right? So in this scenario, what is the option for me? See, prime cost plus factory overhead is conversion cost, production cost, total cost, none of the above. Correct? So here see, total cost cannot be because I have just added factory overhead cost, right? Your conversion cost leads to your direct labor, direct expenses and all those things. These are your conversion costs. So the appropriate thing over here is production cost. And I have analyzed the pattern of your examination, like your PFRDA examination. What happens in this is you are asked theoretical questions, like primarily theoretical questions are asked from the costing, and those questions are very basic, very conceptual in nature, right? You will be given with four options, and those four options will be, what you can say, very contradictory with each other or very similar with each other. So it must be very difficult for you to find out the correct answer. So the need of the hour is that you should hold a grip over the concepts which you have studied and be clear with what you have studied. Only in that scenario only you will be able to choose the correct option, right? Moving on to the next question. So, question number 2. If cost of goods sold is 40,000, okay, gross profit margin is 20% of sales, then calculate gross profit margin. So, easy question of calculation, very super easy question. What you just have to do is, you always know that cost of goods sold plus gross profit is your sales. Correct? So if gross profit is given to you 20% of sales, that means out of 100 parts of sale, 20 is your gross profit, then 80 will be what? Your cost of goods sold. Cost of goods sold is given over here 40,000. This is cost of goods sold already given to you. Now if my cost of goods sold is 80, then my gross profit margin will be 20. So this is how I will find out my gross profit margin. Calculate this. So 40,000 divided by 80 multiplied by 20. 10,000 will be my answer. This is my gross profit margin. Don't do mistakes in such easy questions because these are low hanging fruits and you can easily score mark over here. So don't do mistakes here. Next is, now they are defining a method and it is being asked to you that which one of the following is correct as per you. So the method assumes that goods received most recently in the stores are the first one to be delivered to the requisitioning department. Correct? So see, if you have seen the accounting standard 2, which we have studied on inventory, you must be aware that as per accounting standard, as per ICAI, there are just two methods which are currently in use in India. One is your FIFO method and the other one is average method, where you do the average of prices. But here they are defining that whichever inventory item you have received recently, means the newest one, you will deliver first that. It means last in but first out. So this method is being defined over here. So this is what your LIFO method, last in first out method. This is the topic of your inventory control, very much in use, like whenever you study about any methods related to inventory, all these things comes into handy. So LIFO method it is, and this is not what you can say a very good method because it ignores the inventory which is already there in your stock and that keeps on piling up and hence leads to a lot of wastage. Therefore, this is not an advisable method. Next. So I have taken this question. This is a very basic question related to your cost accounting, right? I would like to give one, would like to say one thing over here. So all these basic terminologies of cost accounting, right? What is the meaning of cost accounting, costing? What type of costs are included? What type of costs are excluded, right? What is the cost center meaning? Budget, what is the purpose of budget, what is the main purpose of budget, correct? And what all the, what you can say, what are the types of budget which we have. So these are all the theoretical questions, and one will get confused if one has not studied about these concepts in detail. Then obviously you will get lost in all these options. So for costing per se, specifically for costing, I would like to suggest you that please get a proper hold on the definitions which are there in the costing. Do not always run behind numerical questions that okay, we have to solve numerical questions as many as possible and all those things. Numerical questions are limited, easy, and there can be fewer twists and turns which could be brought in your numerical questions. But whereas the theory of the costing is a little bit trickier because it can make you confuse. So please give yeah, so please give a proper discussion and proper hold over the definitions which you will come across into your costing, right? So let's see the question over here. The main purpose of cost accounting is to, now see, the four options are given to me, and if I have not studied about the basics of cost accounting, I would probably choose the wrong option because all four will seem similar to me. I'll not be able to differentiate among these four, and that's how you lose marks. The question which will come in your exam, the level of question will not be difficult. Correct. The level of difficulty will not be that much. But the thing in which we get lost is that we do not have hold over basic things. And that's where we tend to lose our marks. So just see and provide me an answer for this. So option 1 is maximize profit. Number 2, help in inventory valuation. Provide information to management for decision making. Aid in the fixation of selling price. Now see, I have, like I can say, anyone can say that all of four of these are correct. Like how do cost accounting aids in the fixation of selling price? So we have seen this in marginal costing, that it helps us in decide your selling price, marginal costing, your budget preparation, all those things, right? Maximize profit through the concepts of cost control, cost reduction, Six Sigma, lean manufacturing, right? All these are concepts to control the cost, to reduce the cost, to remove deficiencies. Help in inventory valuation. Yes, we have seen so much, like your ABC basis of overhead allocation and all those things, ABC basis of inventory upkeep. All of these are what helps you in inventory valuation, correct? Your absorption marginal costing, that also has a part of how do you value your inventory. So you see, all these things are equal, correct? But here the trick is, yeah, in any kind of MCQ based exam, always seek for the broader option. So if you see option number third, A, B and D, these three options are very narrow in the scope, means they only focus only one aspect of cost accounting. But option C is the broadest one, correct? It is saying that cost accounting helps in management for decision making. Yes. So this particular option will include profit maximization as well, selling price determination as well, inventory valuation as well. So if in exam you are getting confused over the option, then please see, these are narrow but this one is broad. This includes every possible help that cost accounting does to the management. That's why my option is C over here. Question number 5. Kind of similar question. Tell me what could be answer for this. Question number 5. The cost expanded in the past that cannot be retrieved on product or service will be known as. What I will call this particular cost? Any idea, any guesses you guys will want to make? Most welcome. Good. So are you guys going to appear for PFRDA exam on 4th? Or you are not a PFRDA student? Just tell me about that. Okay, fine. So the correct option over here is your sunk cost. Now the tricks over here is relevant cost, that is allocated to your product or service. Product cost, again the same meaning, that is being included into your product. Now the two word over here is past and cannot be retrieved on a product or service. So whenever the word past has come, that means your sunk cost, means now it does not have any value, the cost has already been incurred and it is irrelevant for the decision making. Okay, so that's why the correct option is your sunk cost. Next is a typical factory overhead cost is distribution, internal audit, compensation of plant manager, design. I hope this is an easy one. So typical factory overhead cost is being asked over here. Now what is the takeaway for from this question? So the takeaway from this question is, whatever type of cost you are doing, let's suppose you are reading about factory overhead or administrative overhead, just try to read 2-3 more examples of it, correct? So if in the examination any conceptual question comes, then you can easily differentiate among the cost, and it can also happen that such kind of cost, let's say internal audit cost 40,000 rupees has been given to you in a numerical. So your calculation can hamper, your valuation of stock can get hampered if you are not aware that in which classification I should put internal audit in, right? So please do that thing also, that whatever type of cost you are covering, just cover along with the examples so you can easily differentiate. The correct thing over here is compensation of plant manager. It might seem easy to you over here, but in the examination pressure where you are you have the negative marking over there, right? So in that scenario it becomes too difficult to choose even the correct option, because your inner voice will say, okay, what if I have chosen the wrong answer, right? So in the normal circumstances our answers tend to differ, but in the exam scenario, in the exam pressure, we can tend to make a lot of mistakes. Hence it is extremely important to be confident whatever the subject you are studying in. Yeah. So you see, these kind of questions are like very, what I have seen in your such kind of examination is, now they are not much focusing on the numerical, but in accounts they have to ultimately focus on numericals, but in costing and all those type of things they are just taking your basic understanding, right? So what do you think, that change in technology would be classified under what type of cost? Tell me. If I talk to you that you have to classify in these type of overheads, then in which kind of overhead you will classify that change in technology? So compensation of plant manager, yes, plant manager working directly in factory, right? So this will be here. Your design and all those things will not form part of your factory overheads because that is related to administration thing. Correct? Internal audit, again office and administration expenses. Distribution becomes the part of your selling and distribution expenses. Next, please tell me that change in technology. Where will you classify change in technology? In what kind of overheads? Period cost. See, when you differentiate period cost, product cost means what? All those costs which you can directly identify with the your product. Period cost means all those costs which are incurred with respect to time. This is the difference. So change in technology, let's say take an example, right? So I have to manufacture a particular kind of biscuit. There is a new variety which has come into the market, and for which I need a proper sanitation and all those things, and machinery required is also a different sort of variant, because I have to make, like, there is a full biscuit line going on. At certain part I have to change the product of what you can say machinery. So I can call it change in technology. That change in technology, why would I have to incur the money? Because I am bringing a new product. So this change in technology cost is directly linked to my product. If I would have not decided to bring in the product, then this cost would have not been incurred. Correct? So this is how I will derive what is my what is product cost and what is period cost. And apart from it, like all these your costs, your change in technology and all those things, if it is a capital cost, like this is a huge expenditure and all those things, then it will go to your depreciation, and that's how it will get included in that part, right? Moving on, question number 7. When a manufacturing process requires mostly human labor and there are widely varying wage rates among workers, what is probably the most appropriate basis of applying factory cost to work in progress? Now, this is an interesting one. This is an interesting one. Tell me the answer of question number 7. What they are saying is, your process is like that it depends on the labor. Okay. Next thing, wage rate is varying among them. Means you can have type A worker, type B worker, type C. Someone is taking 100 rupees per hour, someone is taking 50 rupees per hour, and the other person is taking 20 rupees per hour. Correct? So wage rate is varying. So at which of the following options I should use to allocate my overheads? Okay. What about others? Are you guys choosing this because the font is larger over here? Or you guys really think that direct labor hour is the correct answer? So see, what has been asked over here is, what should be the correct basis of applying factory cost to the work in progress? There are two things given to you. Number one is, they have clarified that machine hours will not be used. Machine hours as a basis will not be used. We are going to use human labor mostly. So that is, my cost allocation would be based on that. Apart from it, they have told me one more thing, that wage rate is varying largely. So I have to use a combination of this. That's why I will use direct labor cost, because it will have number of people as well, multiplied by the wage rate which I am paying to you. So this will be a more appropriate basis on the basis of which I will apply factory cost to the, what you can say, your work in progress. This is the information which has been given to you. You have to use this. So I would have also taken direct labor hours, but the question says that wage rate is widely varying. It means you have to use a combination so that it will reflect the differential wage rates as well. So option is D. Do you guys have any doubt? Okay. No doubt, it seems. Or if you have, then please tell me. So this is the question which you have to attempt. If 120 units produced, okay, 100 units were sold at 200 per unit, variable cost related to production and selling is 150 and fixed cost is rupees 5000. Fine. If the management wants to decrease the selling price by 10%, what will be the effect of decreasing unit sales price on profitability of the company? You have to keep CVP analysis in mind while solving it. Tell me. What would be the option for question number 8? Question number 8. What are your answers for this? Tell me. So, what will be the impact on profitability? Will it remain constant? Will profit will get increased? None of the given option? Or company will have to face losses? It's a super easy question. So I'll only explain this because I do not have that much time. So see over here what they are telling you. Selling price is 200. Variable cost is 50. Now some of you will get confused with this 120 or 100. Right? Like this might happen. So what we'll do over here is just see what is the contribution. 200 rupees is my selling price less 150 rupees. That is 50 rupees is my contribution. What is the quantity that I have sold? Right now, I will take only this for decision making. This 120 units which I have produced is absolutely of no use for me at present. So 100 into 50. 5000 is my contribution. Right? Your fixed cost is what? 5000 is your fixed cost. So you are already operating on break-even point. You are selling only that much which is able to cover your fixed cost. What is this? This is my fixed cost. So this is coming 0. Now if I am going to reduce my sales price even further, then what will happen? Company will have to face losses. Right? Profits will increase. This cannot be any scenario over here. remains constant. Now this could be a confusing scenario for you, because here some people might think in the exam scenario कि okay, if they are reducing sales price, then the quantity sold will increase. That can be a probable scenario, but I'll not take that over here. Just excuse me for 2 seconds. Okay. Please see question number 9. Try to solve this. I want an answer for this. See, what they are telling over here is sales is 40 lakhs, variable expenses 28 lakhs, contribution margin is 12 lakhs, and fixed expenses is this much. Net income is given to you. Company is having no beginning or ending inventories. A total of 80,000 units were produced and sold last month. So what is the company's margin of safety? I have already told you this, right? Can you guys attempt this? What would be the correct option for this? So I'll give you a hint for it, and please try to solve this on your own. How can we do this? So this is how. Sales is given 80,000. So this all is for what? 80,000 rupees, right? How you can calculate margin of safety? Whatever sales is given over here minus break even sales. And how to calculate break even sales? Fixed cost upon PV ratio. Fixed cost is given to you. PV ratio you can calculate. How will you calculate PV ratio? Contribution divided by sales. Contribution divided by sales. 720 divided by 30 will give you your break-even sales, right? Break-even sales first find out, and less it from the sales, you will get your what? Margin of safety. I guess we have just calculated it. Let's calculate. So 24 lakh. So 24 lakh is my break-even sales. It means at this point I earn no profit, no loss. And if I am making sales of 40 lakhs, that means the extra sale of 16 lakh. 40 minus 24, 16 lakh is my margin of safety. Now next, product cost is normally higher in absorption costing, higher in marginal costing, equal in both, none of the given options. Now if you would have seen absorption costing and marginal costing principles, then you would know that out of these two, product cost is normally higher in your absorption costing. Why? Because element of fixed cost is included. Where? In absorption costing. I am telling you extra information as well, because if it comes in your exam, then you should be aware. If cost is higher, then why cost is higher in absorption costing? Because we include an element of fixed cost. Question number 11. The margin of safety can be defined as. What is my margin of safety? Just now we have studied excess of actual sales over variable expenses. No. Excess of budgeted actual sales over fixed expenses. Okay. Excess of budgeted sales over break-even volume of sales, and excess of budgeted net income over actual net income. So my option is this. Budgeted sales less break-even volume of sales. That's how I define my margin of safety. Now this is a very short question depicting the concept of your opportunity cost. Instead of asking directly, this has been asked in a question answer format. So the question is, Mr. Zahid received 1 lakh at the time of retirement. He has invested in a profitable avenue. From company A, he received dividend of 35%, and from company B, he received the dividend of 25%. He has selected company A for investment. Now what is his opportunity cost will be? I guess you should know about it. This is super easy question. What is the opportunity cost here? Tell me what will be the opportunity cost over here. See, opportunity cost is the benefit which you have foregone, the cost of next best alternative. So here he had two alternatives. The number one was company A, dividend of 35%, and option 2 was from company B, 25% dividend. He has gone for obviously the best option. Now the next best option was from what? Company B. So opportunity cost here is, in order to choose company A, he has let gone the dividend which he is going to receive from your company B. So this is my opportunity cost, 25,000. Yes. Now again an easy question, but what you can say, conceptual. In increasing production volume situation, behavior of fixed cost and variable cost will be. If your production volume is increasing, it means earlier you had produced 10,000 units. Now you are producing 20,000 units. So your production has gone up. What will happen to your fixed cost? See, fixed cost in value terms, in absolute value terms, if you have incurred fixed cost of 90,000, so this fixed cost will remain 90,000 over here as well. But you see, per unit will get decrease. So here per unit cost was what? 9, and here your per unit cost will be what? 4.5. See, in absolute terms, it is not going to decrease. This is going to remain constant. But per unit basis, this is going to decrease. So always see the question. That question is asking in absolute terms or per unit terms. Here I am guessing that they are asking in absolute terms, right? So the option for me over here is constant. Okay, and my variable cost will be, now there is just one option over here, and variable cost they are saying increasing. Why variable cost will increase? So suppose, see, your variable cost was 7 rupees per unit. So when you were producing 10,000 units, at that time your total variable cost was 70,000. Now when you are producing 20,000 units, then your variable cost will become what? 140. So variable cost is constant if we talk about per unit basis, but variable cost is increasing if we talk about absolute basis. So always do check in the question that whether question is asking you per unit basis or absolute basis. Here in this question I have just one correct option with me, that is constant and increases. Okay, thank you so much for the appreciation. I'm glad that you are liking the video and getting something out of it, right? So this is it for today. We are going to take few more questions tomorrow, and I'll try to increase the level of questions as much as I can, because today I guess these were easier ones, and tomorrow I am thinking that I'll take some typical one as well, so that you have a nice and good practice, right? So this is it for today. Thank you so much for watching the videos, and if you're liking it, then please do not forget to give